Well, one of the biggest energy users in Australia is Wesfarmers, which not only owns Bunnings, Kmart and Officeworks, but also makes fertilisers, chemicals, plus it retails energy in Western Australia. This week, Edward Boyd caught up with Wesfarmers Chief Executive Rob Scott to talk energy and rising costs.
Rob, thanks so much for your time. Let's start with Australia's economy at the moment and a new government. There's a lot of challenges that the government's facing: rising interest rates, inflation, supply chain problems. How confident are you feeling right now?
Well, I think overall the Australian economy is in relatively good shape, but I think it is right to be somewhat concerned about some of these pressures, the inflationary pressures, the labour force constraints that we have, and also supply chain disruption. So I think it is important that we think through what are the solutions for managing some of these issues. And in our businesses, we're certainly very focused on ways in which we can improve productivity, find new ways to grow, and try and overcome some of this supply chain volatility that I think will be around for some time to come.
Yeah, at what point does inflation start to bite and start crimping your margins and profitability? Are we at that point right now?
Yeah, we're not necessarily at that point, but I think that's mainly for two reasons. One, because the Australian consumer is generally in pretty good shape financially. Interest rates, although they've gone up a bit, are still at very low levels. Savings rates have built up through COVID. Unemployment is quite low as well. But we are starting to see further inflationary pressure, not just in terms of the costs of goods sold, but also in terms of wage price pressure. So it is possible that we'll see further cost of living pressures in the year ahead.
Yeah, what sort of modelling are you doing right now with inflation? We can see in America that's changing consumer shopping habits over there. People are buying cheaper items. Are you starting to see any trends around that in Australia?
Well, across our businesses, we haven't seen any major changes in shopping behaviour, but the feedback from our customers is telling us that they are starting to get concerned about rising prices, be it rising gas prices, electricity prices, grocery prices and so forth. So what we're doing in our businesses is we're really staying true to what Australians know with Bunnings and Kmart and Officeworks and so forth, and that is staying true to our everyday low price philosophy. Now, in order for us to do that, we need to make sure that we are super efficient across our businesses and investing in a lot of the productivity initiatives that can let us keep prices low.
So is this high inflation environment a bit of an opportunity for Bunnings, Kmart and Target?
Look, I think it potentially is. In relative terms, our businesses that are renowned as the price leaders in their respective markets tend to do better when times are tougher. But I would like to think that as an economy, as a country, we can find a way to work through these cost of living pressures so everyone can benefit.
We know there's a lot of labour shortages at the moment. How are you dealing with them at Wesfarmers at the moment? If you have to close any of your stores, for example, due to staff shortages?
Well, we're not necessarily at that point, but we have faced some very difficult issues in terms of retaining staff through COVID because of the unplanned absenteeism. There's still relatively high levels of absenteeism as people are sick and isolating, and that has created a significant cost for all businesses. We are finding that it's hard to attract people in some areas: technology, digital roles, construction, engineering, development roles, particularly in WA. Also roles in supply chain, another hard to find job at the moment. So we are monitoring it closely, and I do hope that we will see immigration levels start to increase to address some of the workforce shortages we have across the country.
Yeah, is immigration the big solution to the problem, or?
Well, I think it's part of the solution. I think if you look over recent decades, Australia has really benefited from modest levels of immigration, and it provides a lot of skilled workers, and it provides another level of demand that we all benefit from, and that tap really was turned off through COVID. So there is a bit of catch-up required, but we can't forget that we need to continue to invest in the skills development for all Australians to make sure that they can provide some of the more high-tech roles that we're desperately in need of, be it in the digital and technology areas or advanced manufacturing. They're certainly the areas that we're focused on in Wesfarmers.
You're obviously one of the nation's biggest employers. The new government's pushing for a 5.1% increase to the minimum wage. What's Wesfarmers' view on that policy?
Well, across Wesfarmers, most of our team members, particularly on the retail side of the business and supply chain, are on EBAs. And now EBAs only capture about 10% of the workforce, and in many ways EBAs have become less relevant because as a mechanism they are proving to not be as effective. But historically they have enabled us to pay our team more than what they would otherwise get on the award. So our desire going forward is that we can continue to use EBAs as a way of sharing the benefits with our team, to have more flexibility around our ways of working and reward them with higher wages. So look, my hope is we can continue to pay our teams more than they could otherwise get on an award, but that is going to require some reform of the EBA system.
And will you have to raise salaries as well to bring in new employees with these staff shortages you're having?
Well, we're already finding fairly significant wage pressure in a number of roles, particularly those hard to find roles. As I mentioned, technology, data, digital, construction, development, supply chain. We've already seen a fair bit of wage pressure out there. So I think it's important that all businesses, including ours, have to have competitive wages in such a tight market.
Big story this week is gas shortages. I know you've got the clean heat gas business in WA, but do you have any solutions for the gas problems on the east coast of Australia?
Well, look, it is a real concern, and it's a concern for a number of reasons. First of all, the significant cost pressures it puts on families at a time when costs are going up generally, but also it really puts a dampener on a lot of the industrial opportunities we have. So look, I think there are no short-term solutions that I'm aware of. I think what it highlights is that as a country we need to be deeply committed to decarbonisation, and certainly in Wesfarmers that is one of our key priorities. But we also need to manage a responsible transition. And I think the current issues on the gas side, the gas shortages, is highlighting that we really haven't managed that transition as effectively as we could.
Yeah, with your chemicals, industrials, businesses, do you go with the spot prices or do you fix in prices for your gas?
Well, most of our gas-related businesses are on the west coast of Australia, and we benefit from medium-term contracts where we do fix the price of gas. We also benefit from a domestic gas reservation policy that is somewhat unique in Western Australia. Now, that ensures that companies like ourselves and others that have various manufacturing opportunities in the state can get certainty of supply at a sensible price. But on the East Coast, clearly many companies and then ultimately consumers are facing the significant pressure from spiralling spot prices.
Yes, say your suppliers, they use gas, they have to put up their prices for products you're putting on shelves. That all just contributes to inflation, doesn't it?
Well, you're right. It's just one of a number of factors that is putting pressure on prices. And the whole, the inflationary pressures at the moment are very broad-based. We're seeing, and I must admit, they're not unique to Australia. We're seeing it in New Zealand. In fact, inflation in New Zealand's running ahead of Australia. We're seeing significant inflation in other markets driven by raw material prices, gas, fuel prices, transportation costs, and, as we mentioned, wage pressure as well.
You just completed the acquisition of API. You're looking at any other sectors now for potential acquisitions later this year?
Well, we're really pleased with the portfolio that we have at the moment, and the acquisition of API and then the investment we're making in lithium gives us really good opportunities for future growth. We're always on the lookout for new opportunities. There has been a bit of a correction in the share prices recently of a number of sectors, so we're monitoring that very, very closely, but we always adopt a very disciplined approach to our screening of M&A.
Yeah, the tech sector in particular has been hit hard. Is there anything there that you particularly like right now?
Well, the valuations are coming back to some, slightly more sensible levels. I guess as Wesfarmers continues to invest in its data and digital capabilities, we are seeing more alignment across our businesses with some of these emerging technology companies. But at the end of the day, the numbers would need to stack up in order for us to invest in them.
And the construction sector's been under a lot of pressure. How's Bunnings holding up with the home improvement market?
Well, Bunnings has still been trading very strongly, and the important part of the Bunnings business is there's such a diverse mix of customers across consumer, commercial, and many different parts of the commercial market. So whilst building products and new builds are a part of the opportunity in Bunnings, just simply the activity that we're seeing across broader trades is very significant. The pipeline for renovation projects and building projects remains very healthy. So we're still fairly optimistic about the opportunities for Bunnings in the year ahead.
Last time we spoke, supply chains were a big problem. There's still high costs of shipping. Just how much more are you paying for shipping and transport right now?
Well, at an international level, container shipping rates have gone up at a very high level. In some cases, they've gone up 400%. Now, across Wesfarmers, we benefit from a group procurement approach where we leverage our scale and enter into medium-term agreements, which does give us some certainty around price. But like all companies, we're still subject to the high levels of spot pricing. So I think we're managing it reasonably well by virtue of our scale and those contracts. But it is just one of a number of other cost pressures that many businesses are seeing.
And what are the priorities for Wesfarmers for the rest of this year?
Well, look, for the rest of the year, we'll continue to do what we always do, and that is trying to strengthen our existing businesses by ensuring that we maintain very strong value credentials at a time when customers are going to be even more focused on price. We're always looking to expand our offer, to expand our addressable market. Also, we're investing for growth, investing in the growth of our healthcare business, our lithium business, and also expanding our digital and data opportunities through the launch of OnePass. OnePass is a really exciting omni-channel subscription program that now includes Catch, Target and Kmart, and we look forward to including Bunnings and Officeworks in that program later in the year.
Rob Scott, CEO of Wesfarmers, thanks so much for your time.
Thank you.